Hey, this is Jim. It's 11:10 a.m. in San Francisco, California on July the 23rd. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So it's deja vu. The last video that I posted publicly, we were taking a look at this setup right here. We ended up getting that, Wilt candle, the nice tall candle closing in the upper end of the range, and then started to take off into this active zone of strength. And then they came in with a wet blanket algorithm, knocked it straight back down again, and continued to vibrate at 536 before they were able to force it lower. The good news is that by forcing it lower, they actually forced price back under the bigger picture expanding megaphone melt-up fractal point of origin May at the, what was that? Let me look at that low for you guys. Or April, I'm sorry. April, and it was 238. Was that the low? Yeah, $2.38, the all-time low. So that's that expanding megaphone melt-up fractal. We already had a one dropout and then textbook high-velocity reentry and attack of the speed line. That's straight out of the book, if there were a book. And so, that's showing you guys exactly how these work. And you notice the acceleration is between the two different sides of the megaphone, right? So you have to have that dropout. You have to have a couple other rules that I've shared with members in other videos publicly on YouTube. But once those rules are met, and then you get that price dropout, and then that high velocity reentry, for whatever reason, price wants to attack this speed line. This was the same setup flipped upside down that created or aided the 1929 stock market crash and Great Depression, the 1987 crash, 2008 we repeated. So anyway, again, this stutter step is not great, especially if you're long calls and putting up with premium decay. But the fact that price dropped out of this this yellow uptrend line, that's the lower portion of the expanding megaphone melt-up fractal, and then had this very high velocity reentry is, again, very bullish, textbook. And if it weren't for the halt and all the games that they played since, this should have been screaming up toward that upside speed line. I'm going to clean this up a little bit. Okay, so again, here's our next zone of strength intraday. You'll notice that I have these notes here. So this is the Anemoy terminal daily trigger at the 505 level today, July 23rd. And then here's our hourly trigger level, 515 and dropping each hour, only by about a penny. So this is a classic textbook potential bullish airplane setup, and you can see my note there. So basically, if you were looking at the 6-month chart on the Anemoy terminal, you'd see this hourly trigger slowly curling down toward this slightly upward sloping daily trigger, and that's your cluster. It's called an airplane setup when it's bullish, and so what we're looking for is a move back up, and then for the hourly trigger to start to, instead of just flattening in the hour-to-hour number, start to actually rise. So with a little bit of luck here, we're about to see a powerful move up. It's we'll call it 11:15 a.m. West Coast. So, more than an hour to go in the trading session. What's that, an hour, 45 minutes? So plenty of time to take off today. If these guys try to hold this 508 vibration level to do more of whatever it is they're doing, my sense is that they're actually, there are people getting long the stock and ready to take it up, ready to allow it to go up, ready to take the boot off our throat. but we'll see. So if for some reason they can hold it down the rest of the session today, July 23rd, I would expect either, a gap up move tomorrow or just a powerful move up during the first 1 to 3 hours of trading on July the 24th and off to the races. I messaged members about an hour ago, I guess, that I thought that it was this zone of strength ahead today, and especially the first several hours tomorrow and the 24th is powerful enough to get price right back up above this $5.76 high posted yesterday, July 22nd. So again, everything about this setup, using both the BAM method or looking at the anemoid terminal, is not only potentially bullish, but if you start to move up, it's explosively, dynamically bullish, meaning, you should get this sort of a price move, but with follow through. And typically in the anemoid terminal, a successful airplane setup on that 6-month chart, can lead to a multi-week advance. And it's very rare to get whipsaws, either on that 6-month chart airplane setups or bearplane setups, or on the day trader. Whipsaws are really, really rare, which makes the tool, superior to moving averages and things like that. So that's the setup. If you guys want to take a quick look at this this red downtrend line, this is the one that we were looking at before to set up that 536 vibration and buy signal that we got. I'll show you the point of origin on that. It's the high that was posted on July the 8th, and then another intraday high on July the 10th. And what happened was once price went through the vibration sequence and they set up this wet blanket right here, forming kind of the typical head and shoulders pattern. You can see, left shoulder, head, right shoulder. You can't see that, but you guys get the point. That's pretty typical on these wet blankets, and that's the form, that's the shape that will be traced out when the algorithm's doing its thing. So then what happens is you move down in what I call a bear crawl right here, and then it actually loses that downtrend line and moves under, and then you get the explosive move above, and now you're doing again a bear crawl down that line while you're completing this vibration sequence. So what you're looking for today, what I'm looking for today, is any tall green candle, so closing upper end of the range, tall 5-minute candle. I define that by 5-10 cent candle or greater. If you want to pull up volume on a 5-minute bar basis, it would also be helpful to see some nice volume come in. They're bar coding and dark pooling the hell out of stuff today, obviously. But if we track my late day zone of strength and early day zones of strength tomorrow, this thing should be off and running. Now, even if they slow the algorithm down even more or keep it running as slow as it is right now, all that'll do is push the intraday zones of strength that are on the board right now. It'll just shove them forward between 15 minutes and an hour. But because we have this predicted zone of strength that's been on the board for a week, that spans the last couple hours today and then the first several hours tomorrow, even if they push those out, the bottom line is that price should want to start to move higher. And when it does, the setup is not for a drift higher. The setup is for an explosive move right out of the hole here. So that's it from my side for the time being. I'll continue to update members in real time and any observations I see on my side, but you all basically know what I'm looking at. I did go long, add to my August, first week of August expiration, 550 calls. Paid 22 cents, I think, something like that. So that's it from my side. Good luck to everybody, and I will update if needed.